Welcome to another episode of Beyond the Audit, the podcast where we go beyond the numbers to explore the latest developments and trends in the finance world. I'm your host, Nulu Babalo Ngakala. And today we're kicking off a part 3 series exploring the third edition of the IFRS SMEs Accounting Standard. Joining us today is Karolina Martin, an IFRS Director at Forvis Mazars in South Africa. Welcome, Karolina.
Thank you so much for having me. Thank you, Nolu.
Karolina, let's dive into the third edition of IFRS for SMEs Accounting Standards. What's driving the need for these changes? And can you briefly explain to us why the standard is changing?
So the International Accounting Standards actually issued both of the frameworks. So the last IFRS for SME framework was issued in 2015, so that's 10 years ago. And since then, full accounting or full IFRS standards have had a number of changes to it. So the aim of this is to try and align both frameworks principally as best as possible, but also taking into account the simplicity and cost versus benefit for what SME's purpose is.
So how will the new amendments to IFRS for SMEs add value to SMEs once the amendments are effective?
As I mentioned, the full IFRS and IFRS for SMEs are prepared by the ISB. So it's definitely going to add more information to users of SME financials while also maintaining the simplicity of complex standards within full IFRS. So it's more to align the two, but also bringing in the simplicity for users.
Can you tell us a bit more about the timeline for the third edition of the SMEs Accounting Standard? When will it be released and when does it come into effect?
So the final standard was released on the 27th of February of this year, 2025. It is effective for periods beginning on or after 1 January 2027, with early adoption permitted.
So what are some of the key changes we can expect in the new edition? And can you walk us through the highlights?
Just users and preparers must just note that the majority of the amendments relate to numerous revisions and some overhauls. So just some of the highlights. So statement of cash flows. There is now guidance and disclosure around supplier financing arrangements, as well as your change in liabilities reconciliation now is required to be brought in. Looking at your financial instruments, so previously it was section 11 and 12. Those two have now been combined, and now section 12 has been repurposed for fair value measurement, similar to IFRS 13. And the big question on everybody's agendas was whether expected credit losses was actually combined into the SME standards. And great news is that they decided not to bring it in because it is overly complex and not in spirit with the simplicity, cost versus benefit. So it will continue with your incurred loss model with additional disclosures in the form of a financial asset age analysis. And one of the biggest overhauls for me, and I think will be the biggest impact, is the revenue section has been overhauled to be aligned with IFRS 15. So in other words, we are going to be looking at your 5-step model approach and similar concepts, but obviously taking into account the simplicities that IFRS for SME affords.
All right. So for those preparing, auditing, or reviewing SME financial statements, what are the important transitional requirements they should keep in mind with the third edition?
So there's no specific transitional reliefs that have been provided because the board does believe that there is enough time for users and or more preparers to actually gather the relative information on transition to the new framework. But otherwise, it is more of a case of having a look at what is the impact and then having to see where it can be transitioned to.
What would be the first steps an SME would need to take today to assess the impact on their business?
I would recommend that the SME goes onto the ISB's website and just download their project summary page, which summarizes the actual amendments or where specifically the changes have happened. Alongside with that, just also to download the new framework to link the two. Secondly, I would then recommend having a look at your financial statements and then comparing it to the amendments and to see what is actually relevant to yourself, and then start analyzing to see exactly from a disclosure perspective, because most of it is disclosure, how and where a person needs to start looking at aligning so that transition can be met.
All right. Thank you so much, Karolina, for sharing your insights.
You're welcome.
It's been a pleasure talking to you. And then to our audience, stay tuned for the next episode as we delve deeper into the practical implication of these changes.